Good morning, everybody. It is 7:45. I'm going to be 45 years old in a few days, which is insane. And secondly, the Baltimore Orioles are 2-1, so everything's fine. Why are we worried about the stock market being down? Did something happen? Ugh. We're going to talk about the Houthis. They're joining the war. Brent hitting 115. Gold is at 45.59. And everybody who is paying attention to the good old fashioned money printer pro know that materials turned positive last week. We're watching things happen. We're about it. Three things to watch today. Again, the Houthis, the bypass threat. They have entered the war and have Yanbu in missile range. These are words I don't know how to pronounce. Saudis are routing oil exports through that pipeline after the Hormuz was closed. If they hit it, there is no bypass. Brent would go to 130 plus next. The April 6th deadline, 7 days away. I'll be 45 by then. That'll be fantastic. Trump's deadline on Iran energy strikes. If the talks collapse, ground troops and Karg Island are in play. The Dow is already in correction. Polymarket saying 99% probability that the Q1 S&P 500 is negative. I guess they're banking that tomorrow somehow it would go up. I would say if there was a big bet on that, insiders are doing something. Finally, March payrolls drop on Good Friday when the markets are closed. If it misses back-to-back payroll losses for the first time since 2020, nobody would be able to trade it until next Monday. 64.39. We're up a little bit this morning, a little bit of a dead cat bounce after 5 weeks of selling. Remember, our momentum signal went negative on January 28th. 2 days later, gold and silver collapsed. A week later, one of the largest momentum sell-offs post-COVID. And we've seen South Korea sell off dramatically. And, of course, what's happening in Japan, issues in private credit, all the other things. This is why you should be a member of Money Printer Pro. 115 on Brent crude, 101 on WTI. Remember, there is always money in the midstream. We are focused on the pipeline companies moving the crude, not where prices are with crude. But SocGen saying 150 is possible the longer this goes. The VIX is elevated. Anything over 20 is usually considered a little problematic. We're over 25 at 27.8. Fears easing slightly this morning, but let's be realistic about this. The problems are still mounting. The dollar is the story. That's what you have to be watching. The dollar index is over 100. A stronger dollar impacts collateral multiplier capacity. It impacts the repo market. We are seeing a rush on dollars internationally. What is happening? Foreign markets, places like Japan, places like China, places like South Korea, anybody who is pricing and trading in the dollar in order to purchase oil, they have to convert to the dollar first. There is a scarcity of dollars. Michael Howe, Jeff Snyder, multiple other people who follow liquidity have talked about this. I encourage you to get up to date because the higher the dollar goes, the more pressure there is going to be on equity and commodity markets. Bitcoin at 67,000. Remember, we argue that Bitcoin is a liquidity proxy. So when Bitcoin is pulling back, that is telling us that there are liquidity challenges in the market and leverage has unwound. However, we've kind of been range bound at this $65,000 level. I think that's kind of where we're going to stay for a while because of the sheer amount of support provided by passive ETFs. The Houthis have entered the war. The bypass is under threat. They fired missiles at Israel over the weekend and entered the war. Iran denies direct talks with the United States. It says the U.S. demands are, quote, excessive. New missile waves happened overnight, and explosions at U.S. bases have occurred in multiple countries. The Saudis' bypass port, the Yanbu, I believe on the Red Sea, is currently under Houthi range. Ships are attempting to cross the Hormuz. However, the first test of the blockade, refineries are being struck right now. And this is a reminder that in the United States, we have pipelines, we have our Gulf Coast refineries. That is where there is less political risk. So we may see an expansion of investment in that region. I continue to remind you, there's always money in the midstream. those names, those companies that are midstream, like MPLX, ET, EPD, they're all up. As are the downstream refineries. They are showing very strong momentum. Stocks like Valero and PSX. Trump's deadline for April 6th is 7 days away. Man, this is making me feel old. Morgan Stanley just downgraded global equities to equal weight. Congratulations, guys. You're 3 months late. SocGen saying Brent is at 150 is on the table. I don't disagree with that. However, I will point this out. We talked about this over the weekend. I think it's very important that everybody look at the XLE, okay? And I want you to be very, very, very aware of this. This is what happened in 2022. And we are in the post side of the liquidity cycle. We also have an XLE that is running, right? So equities underperforming, money flowing into energy. You have to pay attention to this 20-day moving average if you are focusing on the energy trade. And the reason for that is that you might get up one day and we might see hedge funds dump. This happened at the beginning of 2022. We had a huge run up in the XLE, going up from 27 to 46. And then we woke up one day and the XLE and all momentum went negative. Largest hedge fund sell off in 15 years. The economic conditions index were certainly in play at that point. There were deeper concerns about the impact of energy inflation on the broader markets. But look at the type of violent move. Remember, markets take the escalator up, they take the elevator down when it comes to energy. Pay attention to that key moving average to just recognize what funds, CTAs are doing as well. 5 weeks of war, first week, 15% jump in oil. Markets had some shocks. Escalation started to begin. The attacks by the Houthis started. We saw crude hit 90. The IRGC warned of closure on the Strait of Hormuz. We saw 100. Ships were turned back. Bases were hit. Brent hit 111. Iran is denying talks. The Houthis are in. We're seeing the test in the Hormuz. And, of course, SocGen saying that $150 Brent. My message to you is the same. There's money in the pipelines, in the storage, the Kinder Morgans, the ETs. That's where I want to focus. I don't want to be speculating in places. I want to be focused on U.S. equities that benefit the most. It is the most transparent market in the world, and it's happening right here. Brent's at 115, WTI 101, SocGen at 150 on the table. Saudi Arabia has been using that port for exports after the Hormuz was shut. The question now becomes, what do these militants do that would impact prices? This risk premium is starting to arrive. The Abadan refinery was struck again overnight. Aluminum continues to move higher because of production site strikes. Natural gas is down a little bit on mild weather. Remember, here in the U.S., things are cleaning up. But this is a reminder. This is why we want to focus on the midstream and not be trying to speculate around the UNG or any energy prices. Higher fuel costs are expected to hit corporate margins. They're going to hit airlines. A lot of that stuff's already being, quote unquote, priced in. But the question is, where does this go? Remember, $150, $160 oil would be astronomical and would have a huge impact for multiple quarters on airline stocks. I'm going to set that one out. I'm not going to speculate too much. I'm not an airline investor anyway, but I will note that if we do see some sort of peace agreement, if we do see something brought to the table, well, that's one of the first places that I want to trade. Watch that 8 and 20-day moving average on airline stocks. All right, here's my favorite thing in the world. Japan is blaming speculators for the move on the yen to 160. And if you've been following me, you know that I have been talking and warning about Japan for way too long. This is what happens, right? Policymakers make bad decisions. And then when they put themselves in a box, they blame the market. Japan is being shorted because Japan created problems. If this situation continues, we believe decisive action may soon be necessary. That is the vice finance minister this morning. The reality is this. They've been doing this for 30 years. They've been printing money. They've been running loose monetary policy. They have an issue with demographics. And then they're going to blame the market for their problems. They blame speculators when 95% of their crude comes from the Middle East. You did that, bud. 74% of it comes through the Strait of Hormuz. You did that, bud. You created a geopolitical risk. And you made the assumption that all of these things were going to be consistent and stay the same in the future. It's not how the world works. Okay. This is a structural crisis. It is not speculation. And on top of that, they run the loosest monetary policy in the world, and they've done so for decades. So, why is the yen really falling? The oil dependence, the policy that they have been running, the vicious cycle of weak yen, expensive imports, wider deficits, more yen selling, weaker yen. Every month, the import bill grows and the yen gets weaker. And finally, intervention has failed. They've printed money. They did so on November 21st. It did nothing. The carry trade, according to BCA research, is a ticking time bomb. We know. We have been talking about Japan for 9 months. We were talking about that downturn in August of last year. We've talked about it in November. Every time they print money, the S&P 500 runs higher. And I go back to that report that I wrote last year, right? I wrote a report last year explicitly stating that Japan's problems become ours very quickly. 160 is the line on the yen. They will burn their reserves defending that number. Their FX reserves are 1.4 trillion. That's the highest since December 2021. They have firepower. That said, the intervention playbook is pretty simple. Verbal warnings, speculative activity is picking up. Get bent. Come on. Right? They're blaming the financial market for their own policies. Then what happens is you have the rate check calls. We already saw the United States New York Federal Reserve do this, and that led to a short-term pop. Okay, we got that. But now we're past that point. This is boy crying wolf type of thing. The next step is actual intervention. The Ministry of Finance would decide, the Bank of Japan would execute, they would sell dollars to buy yen, and they would spend 99.4 billion total in 2024. It works for months, but it's not a permanent solution. And I will note that if they do this, if they do intervene, if they do print money, don't be shocked if this market squeezes as a result. That's exactly what happened earlier last year. I said this on November 21st. I wrote a letter to our Money Printer Pro people, and I basically just said, look, they're printing money. The insiders started to buy, happened right here. 653 took us up to 690. That's a big move. And everybody says, oh, wow, people have confidence in the equity markets. No, they're engaging in monetary policy. They're engaging in accommodation. So if they do something significant, remember the transmission impact on the U.S. is significant when the Bank of Japan does something. We could legitimately see a squeeze if they intervene, but it doesn't mean it's sustainable. And that's why it's important to watch volume weighted average price, why it's important to watch the cap weight on our Money Printer Pro numbers. Now, the final thing is it stops working, and you can't intervene your way out of a 275 basis point gap. 95% oil dependence on a war zone, 237% debt to GDP. The fundamentals will always win. At some point, this game is over. But this is where we're going to be. Step 3, real intervention. And it's not going to shock anybody. The market will squeeze as a result. It will be low volume. It will be frustrating for people. Shorts are going to get beaten up. But we have to pay attention to what monetary policy is doing in Japan. I'm on top of it. Don't worry about it. Every warning that I talked about is playing out. I wrote about this on August 31st, 2025, 7 reasons why it's worse than we thought, how I learned to start worrying and hate the bond market. A bomb was the name of the article. And the BIS said, and in 2024, the Japan carry trade unwind as their key example of how foreign shocks transmit to U.S. markets. It's on page 63. I quoted it directly. The primary warnings here are the Fed has no control over U.S. financial conditions. Stable coins could blow up the treasury markets. Banks are exposed to private credit. And of course, hedge funds hold 10% of treasury float at zero haircut, and they have to unwind it if yields move much, much higher. Japan is where all of these things are problematic. The fifth warning is, of course, inflation expectations are broken worldwide. They're living it. 95% of oil comes from a war zone. The yen is collapsing. Number six, programmable money is currently being built, right? Project Agora is still under construction. 7 central banks, 43 institutions, the plumbing of the next system. And number seven is the dollar stopped acting like a reserve currency in April 2025. The BIS report from last year was the diagnosis. The Iran war lit the fuse. Japan is the detonator. It is our problem, and we have to start acting like it. The Mag 7 lost $850 billion last week. Hey, the great news just keeps coming, everybody. I'm going to go put my foot in the toilet and see if I can flush myself right down it. Come on. The Mag 7 wiped out $850 billion from the market last week alone. Meta and Google lost a landmark lawsuit over social media addiction, and Morgan Stanley has downgraded equities to equal weight. Guys, you're 4 months late, Morgan Stanley. You are so far behind the curve. Our signal went negative January 28th. We saw multiple negative events. We are on the backside of a liquidity cycle. Pull it together. It's Monday morning, everybody. 10-year is currently at 110.42. The 30-year continuing to look higher. Bond markets are still underestimating recession risk. But remember, we really haven't had a recession since 2008. Why? Print money. They keep printing money. It's so much money that they just keep printing. It's nonsensical. It just keeps going. We're off the pre-2008 world, everybody. They even changed the definition of recession under Janet Yellen. What are we doing? The combination of 115 oil, though, disrupted supply chains and collapsing consumer confidence is toxic for growth. And this may actually be the first time that we actually have that recession conversation. That's significant. We haven't allowed that to happen for so long. There's so much leverage in this system. Gold's at 45.59, silver at 70, platinum at 1918, 1918. Oh man, makes me feel old. The Haven trade is still accelerating. The dollar is back above 100. That's what matters most. And of course, Fed Chair Powell speaking later today. Futures rebounding, but don't be fooled. This is a dead cat bounce. The grind lower trade is still consensus. Record outflows in India. How did this slide get in here? Pass. 4 days, 4 trading days, everybody. Good Friday on Friday. We are going to be closed Monday today. We have the ISM manufacturing at 10 a.m. Powell will speak. Defense and energy will lead the open. USA Rare Earth, USAR, and Trilogy Metals both have earnings. USAR is tradable. It's something that I want to utilize with volume weighted average price. I'm about it. Tuesday, the Jolts. Nike is going to report earnings. Who cares? Oil impact on retail margins will be in focus. Wednesday, we got the ADP numbers. That's critical. CAG, McCormick. Come on, man. Guys, get it together. Stop buying brands. We're going to look for cost commentary on energy and food prices. Friday, we're closed, but jobs report comes out. Markets are going to be closed. If it misses, that would be back-to-back payroll losses for the first time since 2020. Hey, we have 3 shows all at once. The Morning BRRR, which you're watching right now with me, Garrett Baldwin. Very exciting. We also have Me and the Money Printer, which is a free letter that goes out every single day. You can watch it with your friends. You can send it to your enemies. I don't care. The stuff nobody else is reading, that's where I dig into. I talk about the BIS reports. I talk about the plumbing of the financial system, the stuff that actually matters. Money Printer Pro comes out after this. I'll record that and also send that out about 9 o'clock today. We talk about our breakout stocks, our breakdown names, and of course, we have our reader. On top of that, we have Insider Buying Report as well, plus insiderstockbuys.com. Guys, we are just a walking mechanism of ideas for trading. I hope you guys are excited about it. I want to thank you guys for taking the time today. You could be doing anything else, but you're watching me in the morning, and I appreciate your time. If you have any questions, drop them in the comments or reply to the email. We can do anything together. I hope you guys have a great trading day. Take care and stay positive.